Hello, everyone. Good evening. Good evening. Good evening. How are we doing today? If I could get a quick mic check and have you guys let me know that we can all see the dollar index monthly chart. All good. Awesome. Thank you, J.I. Fish. David Vega, only be able to be on for another 23 minutes, but excited nonetheless. Awesome. Yeah, it'll be recorded for everyone's edification. All right. Is everything good? All right. Thank you, Earl. Thank you, Eubene. Thank you, Lael. Thank you, Silent. Awesome. Mitch, thank you. May, thank you. All right. Let's go ahead and get into it, everyone. See, we got quite a few new people in the community, in the Telegram, and our different socials. So I want to say welcome to everybody to this Sunday webinar where I live stream. So my name is Dylan Richards. I am a futures trader, and I am the CEO here at Adora Trading. So with that, what we're going to be doing here is our usual intermarket analysis, getting into the brass tacks of what we're looking for in the charts this week, and we cover all assets. We got Forex, indices, and even commodities on lock. So we'll go ahead and get into that and discuss all that good stuff. So let's go ahead and get into it. Hello, Anita. Hope you're doing good. Denisha, hope you're doing well. Thank you for joining. David Vega, excited to see what Dylan will cook up for us today. Awesome. Yeah, definitely got some good sauce for you guys today for sure. Put you guys onto some free game. Lucas Holtz, what's up, bro? Hope you're doing well. Yes, sir, doing well. Hope you're good as well. Eubene, good to be back for the live. Good to have you, my man. Latrice, hello. Earl, what's going on, brother? Happy to see you. Olawale, happy Sunday. Good to have you. Amy, Frank, hello, hello. Russell, what's up? Hope you're doing good, my man. All right. Earl, thumbs up, everybody. Thank you very much. Rich Carey, what's going on, brother? Hope you're doing good. Quasar Lord, awesome. All right, so we got a full house today. So, all right, without any more delay, let's go ahead and get into it then. So today, I felt a little more inspired this morning to provide you guys a more detailed session. I noticed, the past 3 weeks specifically, we've been growing a ton. We have a lot more people here in the community. And for the new people, that are seeing what my associates are sharing on Twitter and stuff like that, seeing our analysis, like, wow, like this guy must be really hot. He must have a hot hand. I do want to remind you that I do not have a hot hand. I have a steady hand. For those of you guys that have been with us since the Telegram days, and I know the OGs remember the Telegram live streams, you guys know this is nothing new for us. It is business as usual. So again, like I was saying, a little more inspired today to give you guys a little more detailed session. Like I said, give you guys a peek behind the scenes. And truthfully, I also have some things to teach one of the clients I'm working with. So I'll also be mixing some of that stuff into here as well. But again, we'll be doing the same analysis that I usually do. It just won't be as straight to the point, like, okay, we're bullish, we're going here, here, and here, and then on to the next thing. I'll give you guys a little more explanation behind why I'm seeing specific things and why it's delivering as a result, just to give you guys a little insight into what I'm using to call these markets. So with that, let's go ahead and get into it. David Vega, facts. Steady hand is the best hand, definitely. Awesome. All right, so dollar index monthly chart. Let's go ahead and get into it. So again, we've been expecting a bullish month. We have been looking for higher prices in the dollar. So when we open this month, remember I told you guys that there's a possibility that we're going to open and trade lower. Again, you guys may know that as accumulation, manipulation, distribution, power of three. I'm looking at it as the market is opening, and before we expand higher, it's going to do what? Manipulate. Usually wicks are going to have or candles, are going to have a wick on both sides. So when we open here, we're anticipating this little wick lower before the expansion higher that I'm expecting to see this month. So with that into consideration, looking at the anatomy of the monthly candle, this is going to make more sense as we go down through the time frames. So we have been bullish. We've been looking for lower prices ever since here. We've been looking for higher prices into the buy side, and now we finally traded into this monthly inefficiency. So my levels, the key levels that I'm looking for haven't changed. Looking at this inefficiency, consequent encroachment, that still remains my target on a monthly basis. And you see we traded almost up into that and pulled back. So I'm expecting us to trade into there. And then through that level here, we're going here into the volume imbalance where these two candles, the bodies aren't touching. That's my monthly draw on liquidity. All right, so let's drop down into the monthly chart. Get into it. All right, so we've been seeing bullish order flow. Again, these lows stops taken, and then we've been distributing to these highs. So we have been bullish, but remember I took our attention to the previous week that we have seen 12 weeks of consecutive upside. So the dollar has just been on a tear higher, obviously putting pressure on the index market and the currency market, as we've been seeing. But order flow still bullish. We opened, we traded lower. Remember, I took our attention to the weekly chart here and here, these two inefficiencies, saying that if we were going to remain bullish and seeing higher prices on dollar, we should find support in these discount levels. And then you see we opened, traded lower, expanded higher, which is what we expect in a bullish week. So because order flow is still bullish, nothing has changed my stance on dollar. We're still looking for higher prices. We saw the retracement, and now we're back into expansion. And again, I'll cover those details and the intricacies behind that on a daily chart. But for right now, we're looking for higher prices. My attention here is on this buy side, which would be the previous week's high, the one before this one. And then through that, I like this buy side liquidity here in a premium. So remember I shared why this high specifically, because if we look at the dealing range we're trading in, so the interbank dealing range from this low to this high. So this is the dealing range that we're trading within. So looking at equilibrium, we're right here. So if I'm expecting the market to deliver to a short-term premium, what's the buy side that's in a premium? It is this swing high right here. So this is why I'm specifically looking for that high. And then through that, we have the remaining portion of the weekly inefficiency. So I'm expecting this following week's candle, in simple terms, to open and give us a bullish expansion higher. So I'm still expecting risk off, which is dollar higher, everything else lower. So daily chart. So just looking at the bigger picture here before we zoom in, still seeing bullish order flow. All we did was take out these stops, and I'm still expecting this market to expand higher into these key levels. So now zooming into the price action that we're in. So we've been really all over dollar like white on rice. After this swing high here and then closure below this inefficiency, I did, and then my associate Tommy, he's been taking everyone's attention in the Telegram to lower prices, more specifically the swing low. Why? Because again, I covered order flow's been bullish. We haven't seen that upset in quite a while. So it'd be logical that if they're going to keep repricing dollar higher, they're going to take it below these stops. Why? Because there's traders with real orders there. Fund managers, retail traders, hedge funds, they have orders below there. So we were expecting the market to dig into that. But what was the narrative I gave? Remember, I didn't say we're going to go here because I'm bearish. I said we're going to go to this level, accumulate these stops, absorb it, and trade higher. Did we do that? Did we displace higher with an inefficiency, confirming bullish institutional order flow? Yes. So we're seeing a lot of factors come into alignment. And then this is going to be the underpinnings for why I was trusting indexes to sell off. But we'll get into that one thing at a time. So again, took our attention to the stops here, traded below those lows, and look at how we did so. Very weak. So just sweeping the liquidity and then rejecting. So because I was already expecting a reversal here, I'll go ahead and give you guys some insight into SMT and how I already know when SMT is going to form. I don't need it as a confirmation. It's something that I'll look for if I want additional confirmation of what I'm looking for, but I already know where SMT is going to form before it does it. Why? Because if SMT, or the smart money technique, where one of the indexes, or not indexes, in this case, currencies, does not make a lower low, and we see that crack in correlation, that communicates to me what? That this was just a stop run and that the market's going to continue higher. So looking at here, we have pound and here we have euro. So what I want to do is look at the respective highs here. So here we see dollar made a lower low, which should be met with a higher high in euro and a higher high in pound, but we did not see pound make a higher high. So because one of the correlated assets failed to make a higher high at a critical level where I'm already looking for the stops to be taken and rejected, that makes it a slam dunk. That's why what I'm sharing to you guys is not the usual. It's not the usual precision that you get from other places because of what it is that is going into my analysis. So again, I said I'd give you guys a little peek behind the scenes. So again, we see that SMT here when I'm already expecting the market to reverse. So I didn't need to see that SMT because I already knew it would form at this key level. And then again, we see the market reprice higher. So looking at this here, we have an inefficiency. So we took out the stops and we traded higher with an inefficiency. That's something I like to see. Why? Because that confirms to me that there's institutional sponsorship behind this move. So it allows me to trust that we're going to continue expanding higher because this was sponsored at an institutional level, as we see by the displacement higher. So moving forward, we see that we've closed Friday above midpoint. So looking at this fair value gap here, extending that through, seeing that we closed above the midpoint is an extremely bullish signature. That's something I want to see. That's something I'm looking for when I'm actively probing order flow to see where the markets are going. So the fact that we closed above midpoint, that confirms to me that this market's bullish. And then the levels we've been calling for the past 3 to 4 months, I'm still expecting them. So again, my first target for this week will be this swing high here on the daily chart. Another function of a retracement is once we traded higher here and retrace below these lows, it serves 2 functions. One, it's absorbing the stops and purging the stops below this low, but it's also building buy side above this high. Everyone's trying to call a top in the dollar right now. So what that's doing is as this retraces, people are trying to call a top and there's orders there. So I'm expecting the market to accelerate through this high and into this buy side here. So those are my 2 targets for the week. And then through that, I like the 108.7 level for this monthly volume imbalance that we were looking at. So those are my upside targets. An invalidation level for this bias on dollar would be getting below the order block on here. So I'm about to show you guys a 2-day chart. Why the 2-day chart? Because if you look on the 1-day, the order block isn't as clear. But if I go to a 2-day chart, now you can clear as day see this order block. So order block theory is not limited to just more traditional time frames. I'm able to use order block theory across all different time frames. And it's even better to do it like this. So there's a lot to order block theory to understand, but again, I'm just giving you guys a few details here and what I'm using to invalidate or validate my bias. So here, down close candle, trading into this low. What's occurring there? We're seeing a change in state of delivery. From here, we go to retracement, right? We're retracing lower. And then what are we doing? Transitioning to expansion. So in that transition, there's going to be an order block created. Because remember, order blocks are created in the switch between a sell program to a buy program. So we're seeing a change in state of delivery. Now we're going to start seeing the market start offering prices higher, higher, higher because of the change in state of delivery. So I do not want to see us get below this order block. That would be an invalidation level. If we get below that, then I'll reassess and see what the markets are showing. But for right now, we're bullish and I do not want to see us get below this order block. On a daily chart, we have this inefficiency here in purple that I will expect to act as support and send us higher. A lot of things I could go into. We could be here all night, but let's keep it moving. All right. So some other things I want to cover is high resistance versus low resistance trading. So you guys remember from when we were up here, from when we broke down, where have myself and my associates been taking your attention to? Remember I said when we opened Sunday, the draw would be this low here. Why? Because that's that daily low. So I'm giving you guys a lot of narrative in these live streams as well. So we open, we run lower to the lows, but look at the delivery lower here. So what I want to do is zoom way out on this chart and let you guys observe. So look at how when we deliver higher, we're seeing dynamic, sharp expansions higher, aggressive expansions seeking premium levels. So we're seeing institutional order flow is bullish because we're seeing displacement on the upside and lack of displacement on the downside. So again, look at the price leg here. Just looking at these two, compare when we trade higher versus this movement lower. Where are we seeing the energy? Where's the aggression in price delivery? Obviously, it's higher. Whenever we trade higher, it's aggressive, it's low resistance. But we see here when we're trading lower, it's high resistance. Look at all the down, up, down, up, down, up, down, up, all the back and forth. That is high resistance. How do you know when it's going to be high resistance delivery? When we're trading against higher time frame institutional order flow. So because higher time frame institutional order flow is what? Bullish. When we're trading against that, are we going to see dynamic sharp runs lower? No. It's going to be high resistance in nature, which is why I don't like to trade this. If I was a Forex trader and euro pound is going higher, you'll see the same thing there. Just transitioning to that real quick. Look at euro on the move higher. Just real sloppy back and forth, not price action I like to trade. Pound, same thing. So this is where problematic trading comes in. This is the types of environments that you don't want to trade in because it's going to be a lot more problematic and fickle. But then once we take out the stops, how we take out those stops is key. We trade below that daily low. How do we do it? 1, 2, 3, 4, 5. So we see a 3 drives pattern, but we see multiple anemic runs below the low. So when we're bullish, what do I want to see? I want to see us trade through a high and just aggressively rip through it like it's not even there. But when we see a 3 drives pattern, not that I'm a pattern trader, it's the narrative that it tells me. So when I see we're making 1 run lower, 2, 3, and it's anemic, this tells me that this drop is running out of steam, for the lack of a better phrase. It's running out of steam. Why? Below this low. So all these stops are being purged. So what's occurring there is traders are looking to go short. As this low's broken, what's that? That's support. Support broken means go short. So uninformed or street money, they're looking to sell short here. We as smart money from all the way up here, we're expecting the market to come here to do what? Create a buying opportunity. So this is why I took your guys' attention to in Euro, just looking at Euro here real quick. I told you guys live before Monday's trading even started that this would be a turtle soup short above this high. Turtle soup short here. How much higher can it go to this order block in here? And again, we'll cover those details, but this is the underpinnings behind what gives me the confidence to call those things. So I'm already expecting a change in state of delivery here from a sell program to a buy program. Why? Because narrative tells me so. So all right, with that, I believe that's everything I wanted to cover here for dollar. Beautiful. All right, so seeing us trade below the low, and then what I want to see below that low, obviously an aggressive expansion higher. So this confirms to me that institutional order flow is bullish. So the stops were accumulated, and then we see aggressive displacement higher. So perfect. That's exactly what it is I want to see at these critical levels. So moving forward, again, I shared the targets on the higher time frame, but on the hourly chart, this high through this, I like this buy side here. And then these equal highs here would likely be next on the agenda. So considering everything that's going on in the world, the economic calendar that we have this week, we have equal lows here and a inefficiency. So it would be reasonable for the market to open this week, do a little manipulation lower below these equal lows, into this inefficiency, reaccumulate longs and go higher. So that's personally what I'll be favoring. Can it open and start running higher because we already did the damage or retracing? It can. So this is a week where I'm just going to have to see how Sunday, going into Monday plays out, because we've already seen the, because we've already seen the damage done here. So there's no reason for the market to have to come lower. I would prefer to see them take it below these lows into this fair value gap and trade higher. I do not want to see this fair value gap here traded to. I would want to see this be a breakaway gap, because then that'll confirm to me that this market is extremely bullish. So that's what I'll be looking for here in dollar on the hourly chart. So with that, let's go ahead into the bond market. And if you guys like the more detailed teachings, be sure to give this a thumbs up and a comment. Keep me motivated to keep doing this here for you guys. All right, so looking at bonds, go ahead and get into the bond market. And then as usual, I'll take your guys' questions here at the end of the session, after I finish with my presentation. So monthly chart on bonds, ever since we were up here, where have I been taking our attention to? These equal lows here and this inefficiency. So seeing that bonds are aggressively expanding lower, what does that allow for me to do? It allows for me to trust that the dollar is going to continue higher. Why? Because bonds are what drive the movement in currencies. So bonds and yields are what rule the currency market. So once you understand that relationship, everything becomes clear. And what are we seeing here in the bond market? It is extremely weak. Inefficiency here left open, breaking down. Took our attention to this breaker here, and an efficiency, trade up into it, sold off aggressively. So this allows me to trust, in summary, what it is I'm seeing in dollar and in indices. Remember, I told you guys last week how I use the bond market to know what the stock market's going to do, and that's how we've been able to call that with some pretty good precision. So moving forward here, I still like these equal lows. We traded to it, stopped just short, and then we're retracing a little bit. But my attention is still at those lower prices. So weekly chart here. We saw a bullish week last week, which would make sense. I mean, we've seen 1, 2, 3, 4, 5 weeks of consecutive bearish expansion. So it'd be reasonable to expect the market to retrace. And then remember, I gave you guys narrative and explanation as to why when we stop just short of a low and it retraces, why the market's doing that. So we see the market trade up into this inefficiency here, and I'd want to see us sell off from here. I wouldn't want to see us get above this, and I prefer to see this one just completely left open. So daily chart, just a beautiful delivery on the bond market this whole year. All right. So we open Monday here we traded higher through this up close. So that told me we're going to have a bit of a deeper retracement. So we traded higher into this inefficiency and this one here. This one's a balanced price range because it's inefficiency. It's traded higher, lower, and left it. So both sides, so now this becomes a BPR. So now this is a balanced price range. You see it trades to the high end and stops right there. That's a signature I look for in balanced price ranges. I don't want to see the algorithm allow the market to reprice above that, because then that gives me confirmation that we're weak. It's selling off at a level I want to see it do so. So the fact that we see this high there, hit that level perfectly, beautiful delivery, and then aggressive expansion lower. So looking at the bond market now, because we've seen a huge move lower, we have equal highs here and here. It wouldn't be unreasonable for them to want to poke up above these equal highs and then go lower, but it doesn't need to do that. We could just open and run lower. But again, my attention is still lower prices. It's just how we get there is what I'm determining and what I'm kind of measuring right now. So we don't need to go above these highs, but it would be reasonable to see them take it above these highs, poke it up there, and then smash it lower to the floor. So that's personally what I'm going to be expecting in bonds here moving forward. So again, for the newer folks, qualifying what I'm seeing in the dollar, what I'm looking at in the currency market, I concur with the bond market, because then the bond market's going to either qualify or invalidate what I'm looking for in the currency market. All right, so euro dollar, let's go up to the weekly chart. All right, so very weak market. So I took our attention to this weekly fair value gap in here, saying that it would be reasonable to trade up into it and then aggressively accelerate lower. Why? We're seeing the market trade lower again, huge run lower on euro into these equal lows. And again, we were all over it like white on rice the entire year. So looking at this here, we've taken out external range liquidity. So once external range liquidity is taken out, the market's typically going to want to pull into internal range liquidity, internal to the range that we're trading in. So because we took out external, that's how I was able to call the market higher, or that's just one of the facets as to how I was able to call the market higher before continuing lower. But seeing how we trade up into the inefficiency, broke down, rejected, I'm still longer term bearish on euro. My attention is to the sell side here, that previous week's low. And then longer term, this purple inefficiency here has my attention for euro dollar. All right, so daily chart. So last week we opened here on Monday. So I took our attention to this swing high here. Again, why? Because that relationship of external to internal range liquidity. So because external was taken out, the market's going to want to pull into some measure of internal range liquidity. So I said that we'd be going up to this high, but not to the high because we're bullish. We're going above the high to clear out these orders here. Because remember, these markets are predatory. This is a game of warfare and deception. So less informed traders are seeing what? We just hit equal lows here. We bounced higher. Now euro dollar is bullish. Man, we just took out a swing high too. So the breakout artists, they're all over it. Support guys, they're all in. And we're just looking at it to trade higher to go lower. Why? Everyone that was short, they have stops here. So they've been taken out now. Remember, these markets are predatory and they have to be like that in nature, because if someone's making money, someone has to be taking it. So that's the paradigm shift you need to have to be successful in this business. So seeing it like this, everything makes sense. We're already looking for lower prices in euro. We've already taken out a key level of liquidity after a crazy move lower. So we're going to see the market do what? Trade higher to these stops. And remember what I called last week. I said we'd be going above the stops, but how far can we go? And I still feel comfortable with this market being weak. The bearish order block, this wick. So we could trade above this high up to the order block and break down. That's turtle soup trading. You'd sell to these stops, put a stop above the order block, and that's the turtle soup setup I called live last week on an hourly chart. And then we traded to these levels, aggressive breakdown lower. Again here, these last two up close candles, that's now a propulsion block. Why? Because this is an order block that another order block traded into. So now these two up close candles, that's going to take the place of institutional resistance. So now this is the level I'd be looking for instead of this order block. Another thing, this is the change in state of delivery, because we went from what? Retracement to expansion. So in that transition from price delivery, we're seeing order blocks created at all these key levels. So that's the missing part of order block theory that most people don't understand, is it's the change in state of delivery. So as we're going from a buy program to a sell program, that order block is the transition, and that's the bookmarker, the reference point that the algorithm is going to refer to. So again, change in state of delivery here, clearing up these highs. The retracement is over. We now enter what? Expansion. So looking for lower prices on euro. So again, shared my targets on the weekly chart. Same thing here on the daily. I like this low here. Would not want to see us get above this bearish order block. And then also market structure. I'll clear up some things with market structure on the S&P. That'll be a lot for you too, Sal. So we'll go ahead and get into that. But just looking at market structure here at this point of view, this becomes an intermediate term high. Why? Because it already cleared out stops. So this high purged stops and we broke down. So now we shouldn't get above this high for real institutional market structure to remain bearish. Not the market structure you see in romper room mentorship talking about higher high, higher low, and all that nonsense. So again, this is a key high that should not be violated. And again, we see the market selling off. So dropping down into the hourly chart. So again, this is the daily high, ran up into those stops, opening the week here, Monday, trading lower into this BPR, expanding higher for the levels that I took our attention to. And then again, how we trade there is influential. We trade up to these levels. Thursday CPI does what? Breaks down aggressively. So this is how you use the economic calendar. Well, how do you know when the high of the week is going to be placed in? I get asked a lot about weekly templates. You know, and this is also for you too, Sal, so lock in here, brother. With the weekly templates, I use the economic calendar. Again, it's not always going to be 100%. The high of the week does not need to, or high or low of the week does not need to occur on a specific economic calendar day, but it's CPI on Thursday. So if the market's going to deliver higher, what's that doing? That's suckering all the retail into thinking what? Market's going higher. Why? Because it's been going higher, and it just took out a high. Man, so we're really bullish, and they chase it. When they're looking to buy, we're looking to sell. That's the market efficiency paradigm. That's the first thing I train my clients to see the market through. You have to look at the market through this point of view, or if not, you're going to be the one getting cannibalized. So understanding how we traded higher, above this high, into the order block, break down, at what time? How do we know when it's going to happen? Look at the economic calendar, CPI. This is when we're going to break down. This is when the algorithm is going to be permitted to reprice lower using the economic calendar. And then we see an aggressive breakdown here. And then again, attacking the targets that we've been looking for here. So that's what I'll be expecting here on euro. Continued lower prices. All right, so let's go ahead and touch on pound. Man, should have charged money for this one. All right, so weekly chart here for pound. So again, we're bearish on pound, looking for lower prices. So I took our attention to this weekly inefficiency here and here. So we opened last week, traded up into this inefficiency. So if we're going to be weak, what do we want to see? The market trade into it and reject. So we trade up into it, rejected. So again, everything's still a green light for lower prices and pound. So now we have this, that's going to be an inversion fair value gap. So again, you guys saw me do this live. So the same thing you guys see me doing on the live streams with like 1 minute candles, seconds candles, 5-minute candles. I'm just doing the same thing on higher time frames. It's the same thing, just different context. So I'm qualifying this as a inversion real time. So I want to see the market get below this, use it as resistance, and then expand lower into this sell side here, which has been our target, I mean, really ever since we were up here. So just calling it in stages. So again, we're not going to just see one run to these lows. It's going to expand, retrace, expand, retrace. So our first target was this inefficiency here, nailed it, traded higher, going to continue lower to these lows. All right, so daily chart for pound. So I told you guys last week that above this high here, where could we go? This inefficiency. And remember, I told you guys, and it's all there on the live stream from last week, I told you guys we don't even want to see this fair value gap traded to. So as the market is bullish and we're seeing up close candles, I'm live qualifying to you guys what fair value gaps I don't want to see filled. Why? Because it gives me narrative. It helps me understand that, okay, if the algorithm is so weak, it's not going to reprice into this inefficiency to offer efficient delivery. That's communicating something to me. That's indicating to me that this market is weak because it was even unwilling to go there. So if you guys look at last week's live stream, it's all there. I talked about why I wouldn't want to see that fair value gap filled. So we traded into this one, qualified the breakaway gap real time, and then we broke down. So now I'd want to see this purple inefficiency here act as resistance. and we should not get above that. So again, my attention on the pound is these 3 levels here. So for Forex traders, got you covered too. So this sell side here is of interest. Through that sell side, I like this swing low here. And then through this swing low, I like this inefficiency, just the one-sided delivery. And then through that, I like the sell side here. So those are my targets for pound moving forward. All right, so let's go into S&P. Make sure I covered everything I wanted to. All right, perfect. All right, so we covered everything I wanted to do there. And then I'll look at gold real quick because gold is impactful on the dollar, especially with everything we're seeing in the world right now. So I'm going to touch on gold because it is significant to the dollar index. So as you guys know, we were bearish on gold all the way from up here, looking for these lows here, and then the order block, and then the remaining portion of the inefficiency. But we've just seen a crazy move higher on gold, and that's because of the gotta be careful how I say these things on YouTube, but the geopolitical events, things we have going on around the world right now, are, again, they're things you need to pay attention to as speculators, excuse me, in the markets, because they will impact certain things. So again, we've been looking for lower prices to these equal lows here. But what upended all that? What changed that bias? Because in times of WAR, those things make the markets move differently. So we're seeing dollar and gold trading higher, which is something that occurs during times of WAR. We see gold, dollar rise together, which typically isn't what happens. That's not the usual ebb and flow of the marketplace. Why? Because gold's priced in dollars. So we typically don't see those things going up. So if we see continued expansion higher on gold, and gold just relentlessly keeps being repriced higher, then that will put the brakes on higher prices for dollar, because we may consolidate. Now, doesn't mean I'm bearish or I'm looking for lower prices. It just means it may consolidate, because dollar and gold cannot continue going up forever. There needs to be some kind of give and take. So if gold continues expanding higher, that may pump the brakes on what dollar is doing. So just something to consider moving forward. And these types of move here, that's manual intervention. This isn't the algorithm actually repricing this. This is where humans actually go into the market and they say, we want gold at this level. And that's where you see stuff like this. So on gold, I'm not going to call gold because it's just very, very heavily manipulated right now. And I don't have any interest in looking like a fool calling markets that aren't going to move how I'm expecting. Like I said, there's much better markets to trade. So, all right, let's go ahead and go into S&P. And we will look at the weekly chart. And again, I'll teach you guys some things on real market structure. So let's go ahead and get into it. So weekly chart for S&P. Looking at last week's trading, I took our attention to these premium levels here because we traded down lower to key levels. So I was expecting what? A retracement. How did I know S&P and Nasdaq were going to retrace higher? How did I know to call it to these levels? Because dollar is trading lower. So again, there's the ebb and flow in the market. What dollar is doing is going to affect currency, is going to affect indices. So it's understanding the, it's almost like a fine piece of machinery that these markets are. And once you understand one piece of the machine, understanding the entirety of the machine is going to allow you to have more clarity in whatever it is you're trading. Which is why, as currency traders, indice traders, commodity traders, you need to understand and have a grasp on that risk on, risk off relationship, because it is impactful. And if you don't understand it, there will be a lot of things that are going right over your head. So weekly chart here on S&P, again, just looking at the market structure that was setting up. And again, I'll cover this more on the daily chart, but we see the market traded higher and then we broke down. So as we were rallying here, so you see I have this labeled failure swing. Why is this a failure swing? Because it's a attempted rally higher that broke down. But this is also an intermediate term high. So am I just now classifying this as an intermediate term high after the fact? Is this hindsight? It's not, because remember when we were trading down here, I told you guys we'd go up to this inefficiency and then I'd want to see us do what? Break down. So what does that sound like? That's almost like me anticipating market structure. Ooh, that was a good one. So I'm anticipating this market structure before it even happens. That is institutional market structure. Not looking at higher lows, higher highs in hindsight. You have to understand narrative. And then that allows you to understand what market structure is doing. So I'm already expecting this to do what? Be a failure swing. As we're trading higher into this inefficiency, it's almost like 2022 model as well. We traded higher, broke down, shifted market structure, fair value gap, we trade up into it, we sell off. So when you're trading even 2022 model, or we're trading higher and we're expecting it to sell off, you're already anticipating market structure whether you know it or not. Why? Because if I'm saying we're going to go here, fail, and then break down, I'm already classifying this in my mind as an intermediate term high. And then I want to see this remain as a long-term high. So we shouldn't get above this, much less this high, if we're going to continue bearish. And that's how I am qualifying market structure within a narrative. So it's not just enough to go in there higher, high, higher, low, higher, low, higher, high. You need to understand narrative first, and then you can make sense of market structure. So again, looking at the previous week here, we opened, we traded higher right to that order block. The sensitive level on the order block is the low end and the opening price. So those are the two sensitive levels of the bullish order block. I think we fell just a couple points shy of this opening price, but we hit that level and then break down immediately. That's exactly the signatures I'm looking for as I'm looking at price. So as we trade up into that, I'm seeing how are we trading there. And again, we'll refine this on the daily chart. I got a lot of things to show you guys today. And then we break down trading into this inefficiency here, breaking down. So order flow is what? Bearish. So my attention is still lower prices on the stock market. My targets on the weekly chart will be this low here. Through that low, I like these two sell side liquidity pools. Through that, we have this inefficiency here. And then my expectation is that we're going to go to these equal lows in here. So remember I told you guys that this goes so much past trading. It also goes into investing. Why? Because as an investor, as someone who is managing different types of portfolios, not just trading, you need to be able to position yourselves for these types of things. So I'm not long stock market. I haven't been for a long time. I've been short the stock market. So all these rallies, just like smart money, I'm selling into. Why? Because again, remember I told you guys about the predatory nature of the markets. So as this thing's rallying, retail's looking at this like, wow, we're going higher. And now we'll drop down into our daily chart and I'll explain this more clearly. As we trade lower and then we go higher, what's retail seeing? Man, they're seeing the market go higher. I'm selling into all these rallies on my long-term accounts that I'm managing. Again, not financial advice. I am selling short into these rallies here. As we're rallying here, I'm selling short into that. Why? Because what's occurring? So anyone that was lucky enough to be short and made money, where's their stop loss? Here, here, or here. So trades higher into a premium from high to low. And this is what I'm looking at when I'm also probing order flow. We trade higher into a premium above these swing highs. And then I want to see how we trade at premium valuation. And then we break down. So into these rallies, I'm selling. Why? Because I'm already anticipating market structure. I'm already expecting this to be a failure swing and an intermediate term high. So when we break down here again, we're all over it. And we're taking money straight to the bank with this analysis. Same thing here. We've seen aggressive expansion lower. So now what dealing range are we trading within, this high to this low? So what's the market going to do? It's going to trade above equilibrium here, this equilibrium point. It's going to trade higher into what? A short-term premium. Why is it going to trade into a premium? Because we're bearish. We're looking for lower prices. So as it's trading higher here, above this swing high here and this swing high here, or I mean, it's not a swing high, it's a swing high on the hourly chart. I'll show you guys that, but we traded into the buy side. There's orders there. Traders that were lucky enough to be short, fund managers, they're putting orders here. So as it's taking them out, who's assuming those positions? We are, like smart money is. We're looking at this rally. We're looking to sell into this rally. We're not buying it or chasing it like a retail trader. We're expecting it to go here, unseat those traders, take them out, punish them, and expand lower. So we're looking at this trading to a short-term premium to expand lower. So this is why I took our attention to this specific level and no higher. I told us last week that we'd be going into this fair value gap, and then I'd want to see the market do what? Break down. What signatures in here told me we would do that? We traded up, bodies, respecting consequent encroachment. Look at that beautiful algorithmic confirmation. Bodies are not able to get above that midpoint, and then we break down. But what else told me? The dollar, baby. We traded below this low, higher, bam, traded higher. So because dollar's rallying at a key level, when S&P is at a key premium level, I'm qualifying these things. So seeing dollar rally, seeing that SMT, while I'm seeing ES trade to these higher prices, I'm trusting this is going to sell off. So how did I go into Telegram? How did I go into my Twitter and tell you guys that, okay, we're trading up here, now the market's going to sell off, watch. Because I'm weighing out these factors. seeing that we're trading into this premium level simultaneously, dollars rallying from a key discount level. So then I want to see that risk on risk off relationship hold true. So there's a fair value gap here. Why don't we expect it to trade into it and rally? Because we're bearish. We're in a sell program. So the algorithm is going to reprice to and through these levels, not into it like support. We're not expecting this fair value gap to be support and rally. We're expecting this to be inversion. We're expecting us to get below it, use it as resistance, and continue falling. So again, further market structure. So now this also becomes what? An intermediate term high. Because we're already anticipating. We're not guessing. We're not chasing the market. We're expecting it to go up to our very specific level and then break down. So what does that sound like? I'm anticipating market structure. Market structure is on the basis of liquidity and rebalance. So as we're trading higher here to rebalance in a bearish market, we're expecting this to be a what? Lower high. So it's not just higher high, lower low, lower high, lower low, lower high. You have to understand narrative behind it, and then that works. So seeing the intermediate term high here, break down. Now this becomes a significant price point. I don't want to see us get above. So my targets for the S&P is this low here, here, and here. So I'll continue looking for lower prices in the stock market. What's the invalidation level? This high. Because again, order block, we're changing state of delivery. We're going from a buy program to a sell program. So I don't want to see the market get above this high or this order block. Why? Because it's a key high. So those are the levels I'll be looking for. I'd want to see this inversion fair value gap here act as resistance and send us to the floor. So that's what I'll be looking for in S&P. Again, assuming the dollar continues higher and bullish. Didn't touch on Nasdaq. Let's go ahead to Nasdaq weekly chart. Got a little excited there on S&P. So hey, if you guys like this, be sure to give me a thumbs up and a comment. Greatly appreciated. So again, Nasdaq, same thing, breaking down, trading up to the bearish order block, selling off, and then we had this inefficiency. So remember I said that we could trade up into this inefficiency, but what wouldn't I want to see? I wouldn't want to see the bodies close above this volume imbalance here. Why? Because this volume imbalance overlaps with this inefficiency. So I want to see the bodies respect it. Remember, the wicks do all the damage. Look at the wicks coloring outside the lines. But what is the true narrative? Where does the true narrative lie? It lies in the bodies of the candles. So seeing that the bodies are not able to get above this volume imbalance here, that communicates what? That the algorithm is decisively weak, and it's communicating that to traders that are in the know, that know what they're looking for. Again, these algorithms are highly technical, they're highly precise, and they're communicating to people that are informed, people that are in the know. Who wins the warfare of the financial markets? The people that have the most information. That's why you have to equip yourself with the proper mindset and proper knowledge to be successful in this. Or if not, you will get fleeced time and time again. And I'm helping you guys, I'm getting you guys out of the fleece camp into the making money camp. And that's what we're doing here. So this is where the money's at for traders. And if you're in the learning phase where you're not actively trading, you're sitting at the right table. You're hanging out with the winning team. So there's plenty of value to get here for wherever you're at in your trading journey. So seeing the bodies respect that, we'll be looking for lower prices. I like these equal lows here. And then through that, I like this remaining portion of the inefficiency for lower prices. So dropping down into the daily chart for the Nasdaq. So rallied higher to a short-term premium. As we've been discussing, the Nasdaq has been more bullish. You see S&P traded to this inefficiency and broke down, whereas Nasdaq just been a little more overzealous on the upside delivery. But we traded higher to a short-term premium here nonetheless, from this high to this low. Traded to a short-term premium into this inefficiency, institution order flow entry drill. So if you go down to like a 4-hour or a 1-hour chart, there's liquidity there. So the market traded up, upset the order flow there, absorb those stops, and then we see the market decisively breaking down lower. Again, we're not expecting the market to trade down into the fair value gap and find support, or here and find support. We're expecting the market to trade to and through it. Why? Because we're in a sell program. We're bearish. So the daily chart, as long as we stay below the swing high here, so swing high on the daily chart is another confirmation of weakness. My attention goes to these equal lows in here. And then through those equal lows, I like the midpoint of the inefficiency, the blue rectangle. So from here to here. So midpoint, so let's call that 14,374 as a next target. And then through that, hold on, let me take the Fibonacci off. And then through that midpoint or the consequent encroachment, I like the lower end. And then through that, I like this volume imbalance in here. So where there's no candles, I like that as a downside objective. Alrighty, so down into the hourly chart, let's go ahead and get into this. It's already going on a bit longer than I was expecting. So real quick, so looking at last week's trading, we opened here on Monday. I took our attention to this high here. Why? Because that's that daily swing high. So there's a lot of orders there. So I was saying that the market's going to trade higher into this high here. And then I said if we trade, verbatim, if we trade to this high, it's going to be likely, it's going to be probable that the market's going to want to pull into these highs here too. Why? Because there's real orders there. So the market opens, trades down into this breaker, low, lower, low, breaker, finds support, rallies higher through the buy side. And then what level did I take your attention to through that? The daily inefficiency, the daily fair value gap here in red. So we see the daily inefficiency, we trade into it. And then I always tell you guys, okay, we're at this level. Now we got to see how we trade there. So what do I mean when I say that? What am I communicating to you guys when I say, okay, we need to see how we trade at a key level? This is what I'm referring to here. We trade into the key level, and then now we got to consider time. Remember, time's more important than price. So we're on a Thursday with the economic calendar that's indicating to us we have a high impact news driver that's going to be a volatility injection, which was CPI. So what do we see here? We trade up into the premium end, and then we aggressively break lower here. This is a market structure break. This is a more significant break in structure that's turning the entire tide of the marketplace. Not simply a market structure shift, which is just like a short-term change in sentiment. A market structure break is much more decisive. So once we saw that break in structure, that's how I was able to go into Friday, tell you guys we were going higher into this range that we're trading in now from this high to this low. If you guys go on Telegram, or for those of you guys already there, a lot of you guys traded it actually. So we traded higher into a short-term premium above the buy side here and into a premium of this dealing range. So what time are we doing it? On a Friday when the high impact news driver is at what time? 10 o'clock. So this is the 10 o'clock candle. So for context, we're bullish dollar, we're bearish S&P, we trade higher to a short-term premium. And now all that's left is what? The timing elements. What time is the expansion going to happen? 10 o'clock. Why? That's when the high impact news driver was for Friday. So I'm already telling you guys where the market's going to go on the upside, where it's going to fall from, what time the setup's going to happen, and what model is going to form as a result. That's why I told you guys silver bullet. We'd have a nice silver bullet today because all these factors come into alignment. So I already know what models I'm going to trade. I already know what setups I'm looking for. I'm not in here guessing. I'm not in here, randomly hoping, something works. I know what I'm looking for and I know how to take it down. And that's what I eventually train my clients to be able to do as well, is internalize price through that point of view. And again, here we have all these factors aligning. So we see that breakdown. So what I'll be looking for this week for the S&P would be trading up into this breaker. We have a balanced price range here. So I wouldn't even want to see us get above this high here because we have up close inefficiency, down close inefficiency. This becomes a balanced price range. So we should not get above that. So I'd be interested in seeing us do a little Judas swing higher and then trade lower. But again, we do not need to open and do very much of a Judas swing. Why? Because the damage was already done here. Traders with orders here that were expecting the market to go lower, they've already been victimized. They've been cannibalized. They've been taken out of the market. They've been unseated. And now the market's going to rake them across the coals. So we don't need to do any much more of a retracement because the damage has already been done. So I'm expecting us to trade higher, manipulate, and then break down from these key levels here. And then I believe I covered Nasdaq. Nasdaq's going to be the same thing on the hourly chart. So that's going to go ahead and wrap up the what I had to share here. So I'll go ahead and take a few questions and get going. Earl, thank you very much. Appreciate the appreciation, my man. Means a lot. Thank you. Papa Vlad, do you use quarterly theory? That's awesome. I get that question every session now. I do not use quarterly theory. The timing elements that I apply to my technical analysis is more than enough, and in my opinion, far superior. But again, that's my opinion. That's what works for me. If people find success with quarterly theory, if it helps them, great. I'm not going to discredit it. The key, we're here to make money. We're not here to be wrong, right, argue about bullshit. We're here to make money and do what works for us. So if quarterly theory works for you guys, more power to you. But it's something I personally do not use in my analysis. It's not something I factor in. The timing elements, how I understand them, how I internalize it, as I said, are already more than enough. True mentor does not owe the students anything, but always excessively provides for no cost. Thank you for that. I appreciate it. Latrice, in risk off markets, what do we look for in Euro GBP? So for Euro Pound, I'll get to the member questions, guys. I'll get you taken care of. I'm just going through it in order. So Euro GBP, what have we been seeing? Look at the weekly chart. We've just been in a consolidation. So the exotic or currency crosses, when the dollar's in a trending market, crosses will be held in consolidation. So if dollar goes into consolidation, then that'll permit the Euro Pound to move. But that's why I don't like cross pairs. Trading, this is very low probability trading in my opinion. What's the daily bias? I don't know. Nowhere. So this is why this isn't markets I like to trade. If dollar goes into consolidation, then absolutely there's opportunities and setups in the exotic cross market. But yeah, this back and forth staying in one range for 2-3 weeks, this is nothing I'm gonna call and put myself out there, because when I'm making these calls, I'm putting myself out there. Either it's gonna hold up or it's not. And if I were to call markets like this consistently, my strike rate would not be what it is. So I refrain from calling markets like this because it's just not clear to me. Gun to my head, favoring higher prices, but in a market like this, that doesn't mean much. More detail, my brother, hedge fund manager. Thanks, Remnant Capital. Bro, can you help me, and how do you obtain your AM session bias, Raptor? So bias intraday heavily relies on the daily bias. So how was I able to call that short setup? I'm going to refer to the example because, again, I don't like teaching on just things that I didn't call out because there's no proof of concept. But if I'm teaching on things that I'm calling out, I'm telling you before the fact, then that's someone that, obviously is worthwhile listening to because they can walk the walk. So why was I looking for lower prices on Friday? I'm not going to go into the short setup. You can see that on Telegram. And actually, my associate Tommy made a good piece of content on that silver bullet. But why were we looking for bearish prices on Friday? Because the daily chart was communicating all these things to me. Also using dollar, I'm factoring in all those things when I'm developing a bias for a session. So if the daily chart's going to do what? Expand lower. We trade higher into this fair value gap, hit it as resistance, which is what we'd expect in a sell program. That gives me my bias for my session. So again, I'm not reinventing the wheel. I'm not doing rocket science in lower time frames. All I'm doing is applying my higher time frame bias and narrative to the lower time frames. And that's what makes the lower time frames precise for me, because I know how to use it. So to answer your question in short, you need to understand the higher time frame, build a narrative around what that higher time frame is doing, and then drop into your lower time frames, and then a whole new world of clarity is going to open up to you. Remnant Capital, you're feeling fly? Definitely, man, definitely. Jay Rich, would that be a propulsion block? I'm not sure what you're talking about, brother. LN, sharing real value. Absolutely. No fluff here, no bullshit. Straight to the point, straight to the money-making stuff. Absolutely. Joe, great analysis, Dylan. Awesome, man. Appreciate it. Sal, go champ. Awesome, brother. Happy to have you. Darren, a lot of people took shorts on CPI. Why would it continue lower and allow those who jumped on last week to profit on a move further down? So I think I already covered that. I covered all the narrative as to why we traded lower, why we traded higher to these specific levels, and why we're going lower. So retail was already stopped out. Fund managers, they were stopped out of their shorts, and now the market's going to be permitted to reprice lower. So that's pretty straightforward. Guarav, hello from Brisbane. Awesome, my man. Happy to have you. Jay, is it worth marking up the monthly fair value gap? Yeah, definitely. You definitely want to be aware of the monthly levels. I don't have them on my chart because it would then be too cluttered, but I am aware of the monthly PD arrays. I just personally don't mark them. Weekly, daily is personally enough for me for annotations, but you do have to be mindful of that monthly chart as we show you here. So this is leading by example, showing you how you should be doing your analysis, what things you should be considering, and again, just giving all this to you guys, giving all this value here for free for your edification. Guarav Panday, can you look at USD CAD? Absolutely. Good to see you, brother. Dollar CAD. So we're bullish dollar CAD. I mean, simply because obviously we've been bullish on dollar. So I remember calling USD CAD to these equal highs here, and then we retraced and pulled back into the range. So because dollar index is in a buy program, and we're seeing higher prices on dollar, I'm going to look for USD, the dollar Canadian, to go higher because dollar is first in the name. So that just gives me like a soft bias going into my analysis. But now I want to see the technicals confirm that, which we are seeing that. displacement higher, swing high here, traded lower into the inefficiency. So if we're bullish, what do we want to see? Support in this inefficiency. Or like I taught you guys market structure today, real market structure, swing low, low, low. So this is an intermediate term low, or long-term low, excuse me. We're expecting this to be an intermediate term low and this one here. So we wouldn't want to see this low violated. So as we're trading lower here, we're already expecting what? A higher low. So that's the difference in retail market structure, is it's just hindsight after the fact. We're anticipating it real time. So we're expecting this being a lower low if we're bullish dollar CAD, and then we'd want to see the market do what? Expand higher. So we're in a buy program for dollar CAD. We have a weekly bullish order block here. So weekly bullish order block, these 2 consecutive down close candles. So I like how we traded into it, found support, and I want to see continued higher prices on dollar CAD. So my attention for premium levels would be this buy side liquidity pool here. Next target would be this high here and this high here. So that's based off a weekly chart. Let's drop down into the daily. So traded down to a short-term discount to that weekly fair value gap. And then what do we see? Aggressive repricing higher, confirming what? The market is bullish. So how do we trade above this high? Is it an anemic weak run, or is it an aggressive displacement? It's a displacement. So we displace higher, trade back into the range, into this fair value gap here, and where the 2 fair value gaps overlap, hitting that level, trading higher. So I prefer for dollar CAD to see this inefficiency here left open. Here we have a balanced price range where this fair value gap here and here, where they overlap. So I'd want to see this be support and springboard us higher into the premium objectives I've outlined. Below this low invalidates my bias for dollar CAD. So if we get below this low here, I'm no longer interested in being a buyer of the Canadian or Canadian dollar. So I'm expecting a reaction from here, but I also shared my invalidation level for dollar CAD. Christopher, so much gold this guy just shared. Awesome. Appreciate the recognition, my man. I need a low when I grow up. I want to be like Dylan. Thank you. Thank you. Thank you. Thank you. Quick question. Can you provide your thoughts on Dow and oil? Let's go ahead and take a look at Dow. So Dow is going to be the same thing as the other indices, but I know you guys want specific levels. So bearish on Dow. We've been looking for lower prices across all the indices. Again, same thing as the other assets. We traded higher into this inefficiency, and then we traded softer. So here we also have a breaker, high, higher, high. So we have a breaker with an inefficiency. Those 2 PD areas are aligned is a very powerful algorithmic signature. So I want to see the market sell off from here. Daily chart traded higher above the swing high. Beautiful, upsetting that order flow. And now the market should start selling off. So let's go into the continuous contract and get you guys some targets. So again, longer term, I told you guys we'd be seeing the Dow below these lows. So I'm expecting about a 4,000 point drop in the Dow. So I'd expect that to be pretty violent in terms of a move lower. So again, we took out this high, broke down. So now my attention goes to these equal lows here on Dow. And then through that, the rejection block here, which would be the lowest closing price. And then through that rejection block, I like these equal lows here. So that's what I'm looking at on Dow moving forward. Again, assuming all the other indices remain bearish and we see continued higher prices on the dollar. JIS, is there a real difference between a mitigation and a breaker block? So in nature, they're doing the same things. So let me go ahead and cover, what's a breaker we just looked at? Let's go to dollar weekly chart. So the difference between breaker and mitigation is very simple. The breaker block is a order block that made a lower low, and then we're bullish and it's going to use it as support. A mitigation block is associated with the failure swing. So if we were to see a failure to make a lower low here and we fail, then that level would just be called mitigation. In nature, it's doing the same thing, because all a mitigation block is smart money traders that were selling short in this bearish order block to go lower. As the market trades higher, those positions are underwater or they're negative. So as the market trades up and offers price back down into that breaker here, as we're in here, that allows them to mitigate their losing position. So the market isn't mitigating anything. The market is offering it at those levels for informed investors to mitigate their losing trades. So that's what's occurring here. And the only difference between mitigation or breaker is the lower low or a failure swing. So a breaker is associated with the stop run. So because we ran stops, it's a breaker. If we didn't run stops, it'd be mitigation. If you look at them as the same thing, or if you use them interchangeably, the analysis is still going to be the same. So it's not a huge deal breaker, but I get that question all the time. And that's the only difference. It's still the same thing. It's still offering mitigation for underwater positions. Nice work, bro. Enjoy your day. Thanks, Mitch. Jay, I will watch the replay late to the stream. I'm on UK time. Yeah, got you, Jay. No worries, brother. That's why we upload the recordings for you guys. Remnant Capital Trader, what is a settlement price? So you want to go to regular trading hours on indices or any futures contract and look at the closing price the day before. That's going to give you settlement. Rich Carey, fantastic analysis, brother. Thank you. Yeah, man. Thanks for joining us. Denisha, thanks for another great Sunday session. Always appreciated. Give the stream a like before you go. Have a safe trading week. Thanks, Denisha. Much appreciated. Hit that like button. Thank you guys for the support. Very, very appreciative for that. Mohammed, what do you see in oil given the situation happening right now in the Middle East? Yeah, let's go ahead and take a look at oil. That's something I actually meant to cover today as well. So higher time frame, as you guys know, I'm still bullish oil for the long haul. All we've seen here was a retracement. And remember, I told you guys how low can the retracement go? Into this inefficiency in these two down close candles. So I was monitoring this week how crude oil was trading at these discounted levels. So if we were going to be bullish, we should rally from where here. So daily chart. So we opened with a gap higher, obviously because of all the geopolitical unrest that's occurring. We saw a crazy gap on crude oil, filled the gap, found support, traded higher. So I want to see us remain above this low. If we remain above this low here, that's going to confirm to me that the crude oil market is bullish. And remember what I told you guys here on this retracement lower. How low can we go? The inefficiency and the breaker. I remember I covered your question, high-speed trading for crude oil. Remember how low can it go? This inefficiency and this breaker. Trade down into the breaker, boom, off to the races. So crude oil still delivering to script as we've been expecting here. Look at Friday's trading open, hit the high of the breaker high perfectly and rallied. So just a lot of random buying and selling pressure coming into alignment to make all this happen for us. So seeing higher prices on crude, swing high taken out, shift in market structure. So we're bullish on crude, dropping down into, actually, let's look at a longer term view. So my attention higher on crude will be above this swing high here. And then ultimately these levels that I've been taking our attention to here for the past couple months or so, considering oil still bullish. Because, you know, the market delivers in cycles. It's not just going to continue expansion. It's going to expand, retrace. Where's it going to retrace to? A discount. So here is equilibrium. We get below equilibrium. What level is it going to go to? Breaker, inefficiency. Hits discounted valuation. What do we want to see if we're bullish? Aggressive movement away. So we have that confirmation on crude oil. So still looking for higher prices there. Jezim, the day trader, hit that like button. Thank you very much. Scotty, thanks for sharing your analysis. Absolutely, brother. Joe, market structure, Dylan, your footnotes of the weekly chapter. Thanks. Awesome, my man. Definitely glad that was helpful. AN Capital, golden analysis as always, mate. All the best for the week ahead. Thank you. Same to you. Anita Lowe, guys, remember, hit that like button. Absolutely. Thank you very much. David G, plan on going live again this week? Yeah, I will. I'll go ahead and do maybe 1 or 2 live streams for you guys. I got to get on live Monday to work with a client to do some training, but I'll look for see what other days I can do to make it work with you guys. Latrice, yes, hit that like button. Thank you. Faisal, what's up? Do you think S&P gap up or down? That's not something I try to predict. The gap, the opening price on Sunday is something that's a variable. That's something that the market makers, they decide. There's nothing that you can measure and determine. Like, you can have an idea in terms of sentiment, like crude oil, for example. You know, everything going on that side of the world obviously is going to be bullish for oil, so we can, you know, almost anticipate a gap higher. But it's not something I try to predict. It's something that it's a variable. So I just wait for the market to open. That's something I'm comfortable not knowing. Can you talk about journaling your trades? That's a good talking point. That's something that I may do in the future. And that's something I definitely, when I'm training clients, I teach you how to log, how to keep yourself organized, and how to just organize yourself in general to be a professional trader. So that's something that is covered in private training for sure. USD and Canadian dollar, orange and red folder in the AM, definitely. So I'd expect the high impact news drivers or the economic news to just be a smokescreen for them to reprice dollar CAD higher. That's what I'll be looking for. JIS, thanks, man. Awesome. Glad that covered your question. Olawale, thank you, Dylan. Amy Moore, thanks for the Dow analysis. Absolutely. Joe, thank you, bro. Definitely. All right, guys. So I think I'm going to go ahead and sign off here. I don't think we have any more member questions. All right. Will the journaling be covered in mentorship? Absolutely. Yeah. The mentorship is going to have everything you need as a trader. Everything you need to find success, from how you should study, what your daily habits should look like, what should be going into your daily routine, your daily studying. I show you how to backtest. I show you how to tape read. All those things will be covered. Again, it's going to be an extensive training program where you will be leaving knowing exactly what you should be doing and what you need to be doing. Again, I'm not saying it's going to be easy, because it's going to be a lot of fucking work. And trust me, and I really want to emphasize it's a lot of work, but man, is it worth it. So definitely going to cover all those things as well. So right now I'm not taking any more clients. As I told you guys, I'm not currently opening up private training right now. I will be doing that going into January. And in the meantime, you guys have everything I'm doing here. I'll be doing live streams with you guys in preparation for the private training and the mentorship program. Thank you. Great session. Thank you, J.I. Fish. Absolutely. Mohammed, thank you. Thanks for joining, my man. Olawale, absolutely. Latrice, thanks, Dylan. Have a great trading week. Thank you. You as well. Julian, I hope your mentorship will be accessible for foreign people, France. Absolutely. It will be available worldwide. So everyone will have the opportunity to learn and become independent financial traders. Absolutely. All right, everyone, that's going to go ahead and wrap it up here for me. I hope you guys have a wonderful rest of your weekend and have a good trading week. So good luck, good trading, and I'll speak to you guys in the Telegram and through live streams this week. Take care and be safe.